Hello, this is Tom Pizzuti with Trading on the Mark, and today is January the 25th, and we have quite a few economic events coming up both today and tomorrow, and earnings are also interesting. So let's get caught up on the Dow and the S&P 500. As a refresher, I need a laser pointer because just have to. All right, so to get caught up, using the same wave structure as before, starting on the weekly chart, is that I am looking at this as a corrective move up off of the low in 2022. Could see that we have an A wave up, three waves down to the October low, and then a rocket ship up out of that low that's been very steady, certainly an impulsive move, which is should be for a C wave, and to make a C of B. Just as a reminder, B waves can make new price extremes, so some people will probably look at this like, why are you counting this as a B wave high? Well, because it's a corrective structure all back from here, not a five wave. I'm not counting this as some high degree of fourth wave. Instead of using this as the high back here, this being moved down being the initial move of the drop, this being a corrective move up, that will be expecting a five wave impulse down as soon as this high is put in. We'll have a five wave impulse down through this year and maybe into next year. Hard to say. We'll worry about that later. But for right now, looking at this as a B wave high. Note that there's an 8 here at the top of the chart here. This is from Wave 59's 9.5 exhaustion study. It will have a number 9 at the close of this weekly candle, which is an ideal exhaustion signal. So we have a study that is giving us a suggestion of price exhaustion on this move on a weekly time frame. And any other points I want to make? Yeah, it's like we're at an inflection point on the cycle composite here, kind of a plus 1 week just past this. There's a little, really kind of, these are not exact. We need to look at these as being a turn window that span a couple candles on each side of it. So we're certainly within a turn window now. In the next major inflection will not be until say late February. So certainly we have some time for a move that I think will be pretty interesting. The best decline that we've had for a while, and we'll want to be shopping for that. And the first major signal for a reversal on this time frame would be a drop under 369.50. Let's look at a daily chart. On the daily chart, we have a possible five waves up from the October low. So 1, 2, 3, and last time that we have got caught up on the equity indices, we've been in this kind of choppy range right through here. So that early in this, or certainly in late December, we were talking about this high here and looking for maybe some kind of a pullback. Might have one more high in it. It turned out that high was that the corrective low was here in January, that pushed up to a new high. But the same general idea, so is that we've had a corrective move for, call that a couple weeks through here, and we finally have punched to a new high in the Dow. We have negative divergence on the adaptive CCI. We have at a a projected cycle high on the 26th, so that's on Friday. So again, treat these as a window. Certainly, we're in the window for an inflection already, and just from a news standpoint, we had Netflix drive the market in general higher, and then a fall, uh, again some exhaustion. It was interesting is that the S&Ps and the Nasdaqs and the Nasdaq 100 ended up making a tiny new high, and in the case of the Dow, we ended up with a lower high today. So a little bit of divergence. I think that that's the type of thing you see at a high. You'll see some of the equity indices not quite make it, and other ones do. So I'm not in a. I'll get more to this later, but I'm much less in a hurry to buy any pullbacks at this point. We'll see what the aftermarket looks like. The Tesla had a miss, so we'll see how the market reacts to that overnight and into the morning. But as we see on the next slide, that there is a ton of news uh, showing up both on Thursday and on Friday. So uh, short-term inflection points, again, we have one for today, and then another at on the 30th. And again, this is going to be interesting because there's a lot of news in the next several weeks. So there's plenty of things that the market could use to um, move off of, and actually will end up giving opportunity for buyers and sellers. So again, it's going to be an interesting time. So be on your toes. But for today, uh, ECB interest rates are going to be in the morning, along with the U.S. GDP and durable goods. Then we have Visa and Intel earnings after the close. And then on Friday, US PCE, which is important for the Fed, will be at 8:30. So lots of things to keep track of over the next couple days. Again, things that can certainly move the market. We're looking at an intraday chart here, and we see that we failed to make a new high today before having a sell-off in the Dow. And at this point, I'm just not real eager to try to buy pullbacks. Uh, we're pretty well into this move already. Yes, technically, as long as we're holding above 3 37 745 in the Dow, there is a chance to to reach these next target levels up here. But it's not something that I'm going out of my way. Uh, I'm more interested in seeing where we open to later in the day. See if this is held. If not, then I'm more interested to probably sell retraces and try to push down into these lower levels. See if we can see how far down we can get on the day. Yes, there'll be bounces. This is very early. You know, People have been trained to buy, but I would not that those trades won't work, but everyone expects that they buy a pullback and that they get a new swing high out of that. I think what you're going to have to do is to adjust your thinking to that of, well, I'm going to demand a better price on my intraday trade. I want to buy quote cheaper before uh, putting on a trade for a long, and that my expectation is not going to be for a new swing high. I'm merely looking for a move up off of it, some kind of a bounce, and be prepared to have lower highs. So something to keep track of, something to think about over the next several days and probably the next several weeks, I think. Let's move on to the S&Ps. Again, start with a weekly chart. Same kind of basic formation. We've just poked over these highs here to make new all-time highs. You have some divergence on the weekly adaptive CCI. It's indicative of a high forming. Whether we're actually there yet or not, we don't know yet. But you know, again, I am uncomfortable in being in a hurry to buy, more inclined to sell any bounces at this point. Let's move to the daily chart. On the daily chart, we touched this 48.98. It was a little bit over that. Let's just call it the round number at 4,900. Yesterday on Wednesday, and then had some kind of the first pullback over the last several days of any consequence. Again, we have a possible cycle high here. Again, this is a window. They're not really, it's difficult. They're often not exact, but certainly be looking for some kind of pullback. If back under 48.52, I would look at that as an early warning sign to sell and look for a pullback to at least 48.06. And then under 48.06, then I would say that this trend has changed and that we're in some kind of retrace is getting started. Moving to an intraday chart, we could see that we have a wave 59.95 exhaustion signal up at the highs of the day. We have negative divergence on the adaptive CCI. Just about was working on filling the gap, didn't quite make it, was close. I know the futures were able to kind of fill the gap depending on what you call the close, whether you call it at 1600 or whether at 1700. So almost a gap close, but in the cash market didn't quite get there. Given that we had a Tesla earning miss, I expect the market to probably be testing support, so probably be around this 48.59 level. I'm not sure if it's going to make it down to 48.25 early in the morning. That's going to be kind of depending on how the market reads the news. But again, to reiterate, I think the way to kind of orient yourself for today, tomorrow, and probably in the next week is demand more of a pullback. When everybody's been trained, you buy a pullback, you always get a reward. Well, right now, I think you're going to have to demand deeper pullbacks before you put on that long trade. And I think it's something that you still probably want to do for a while until we start seeing some more well-defined market structure that is actually for a reversal. So there's nothing wrong with buying a pullback. It's just that you want them to be deeper, and that to adjust your expectation of not getting a new swing high out of it, that this is just a short-term trade. I'm going to get a move up off of this support number and be prepared to see lower highs, and also start framing your mind around that, hey, lower highs are going to be something that I want to watch and going to present themselves as a sell opportunity. So that's about it for today. Again, going to be real interesting trading over the next, I'd say, 2 weeks. So be on your toes, and good luck. And until next time.